How many times you encountered the situation in the market and you regretted and told yourself, oh man, I wish I had entered here at this point. I wish I could have realized that the price is gonna jump here. If you're interested to learn how you can catch these kinds of movements, stay with me. When we have these kinds of sharp advancing of the price, for example on 15 minutes time frame, it would be a little difficult to discover that the price is going to jump from this point and we must enter here. By the help of indicators, spotting these kinds of sharp movements is very unlikely because all indicators lag behind the price, but with price action analysis it's possible with the related risk setting there accordingly, which this method is also difficult for beginners and it demands years of experience to spot these kinds of movements correctly. One possible method to spot these kinds of explosive movements in the market is looking for some signs and signals on a lower time frame, because there we can better see how the market participants are acting and if there is any sign of buying with heavy volume or not. So by considering that we want to catch explosive and sharp movements on 15 minutes time frame, we switch to 5 minutes time frame for finding supportive signals. Alright, here the time frame of the chart is set on 5 minutes and we should set the chart type on Heikin Ashi chart because in this strategy we need Heikin Ashi candles for finding the signals. Besides the price action, we also need to consider volume because we are interested to know when the market participants are buying with heavy volume. So we have two volume based indicators in this strategy. For adding indicators, here we click on indicators and we simply search the name. The first one that we want to add is Heikin money flow, this one, and we must change its settings. Here for the length we set it at 6, and the next indicator that we want to add is money flow index, this one, and we use this indicator with its default settings. We must add one more indicator which is called LSMA, least squares moving average, this one, which is linear regression moving average, actually the linear regression of the price action. And for this indicator we must also change its settings. For the length we set it at 20 and for the offset at 8, and we click on OK. Everything is already set on the chart, and let's see how we trade based on this 5-minute scalping strategy. The core of this strategy is based on having the price closed above the average, which coincides with increasing in the volume. So when we have a Heikin Ashi candle closed above our least square moving average, it gives us the signal that something is probably happening. The candle should not be a doji, spinning top, or a short candle like this, and it should be large with considerable body and short upper shadow. In other words, it must reflect buying pressure, but this is not enough, and if we trade only based on this, we will encounter many false signals. So we need to also consider other aspects of the market, which in this strategy we focus on volume, because we want to discover heavy volume activity of the market, actually to find out when the market participants are suddenly more interested to buy, which is our case here. So when the price crossed above the moving average line and the Heikin Ashi candle is closed above LSMA line with the characteristics that I explained earlier, then at the same time Heikin money flow and money flow index, both of them should be above the center line. For Heikin money flow, the center line is 0, and for money flow index, center line is 50. By having all these conditions, we can enter a long position here when a new candle is opened. The stop loss for this trade can be placed below the swing low, below the lowest low here, and the profit of this trade can be taken when we get the first candle closed below the moving average line, which happened here. So we can take our profit at this level. Please pay attention that many of the times these kinds of sharp advancing of the price happens after a consolidation period when the market is actually flat, as you can see here. And please pay attention that with this strategy it's recommended to take only bullish signals, because signals on advancing of the price are more reliable than the signals in declining of the price in this strategy, which can be because of the market tendency and bias for bullish market and their willingness to see higher prices in the market than seeing a bear market. It's actually up to you. You can also take the bearish signals, but as I said, the risk is a little higher and you need to manage your risk properly, which I'll explain more about this at the end of this video. For example, in this consolidation period, we can see that we have a bearish signal here with CMF and MFI, both of them below the center line. For this one, MFI didn't support, it's above center line, and another one here, which were false signals. I can argue that these candles were not good candles, not showing selling pressure properly, but because this analysis is subjective, so another trader may decide to take it positively. Anyway, if we take a look at the bullish signals in this period, we can see that for this one, no support from MFI, it's below center line, and for this one, it's a confirmed signal. So we could enter a long position here at this point when this candle is closed and the next candle is opened. So if you want to lower your risk as much as possible, I recommend you to focus only on bullish signals, but with bearish signals, there are also many good opportunities which you can take advantage of them by managing your risk properly. Moving on the chart, here the price went to a consolidation period again, as you can see. Let's see how our strategy does in this period. You can see that most of the time that a crossing happens, one of the volume indicators doesn't confirm any buying or selling, so it hasn't generated any false signals until now. These are short candles. For this one, also no confirmation. Moving on the chart, short candles, short candles. These are all short candles, and here we got a bearish signal which happened with confirmation of both Chaikin money flow and the money flow index, which are below the center line for this bearish signal. So we could enter possibly a short position here at this point with stop loss placed above this high, and closing this position here when we get the first candle closed above the line. Not a good one, low risk to reward ratio. Moving on the chart, no confirmed signal here. And for this one, also not confirmed by Chaikin money flow and money flow index. Both of them are below center line. And moving on the chart, for this bearish crossover, we have both of Chaikin money flow and money flow index below center line. So we could enter another short position here as this new candle is open here at this point, which was actually the closing price of this candle, with stop loss placed above the swing high at this level. And for the profit target and taking our profit and closing our position, you can see that the price was very volatile in this period with deep pullbacks, and the price closed above LSMA line several times, as you can see. And for this position, we would probably close our position here when we get a candle closed above LSMA line, very close to our entry point. Again, not a good trade for this bearish signal. For these bullish crossovers, we didn't have confirmation from CMF and MFI, but for this one here, it's a valid signal because we have a well-shaped candle closed above the LSMA line. Chaikin money flow is above center line, and also money flow index is also above center line. So we could enter a long position here at this point with stop loss being placed here, and taking our position here when a candle is closed above LSMA line. Please pay attention that this strategy, similar to any other trading strategy, doesn't provide 100% guaranteed signals, and losing trades are part of the game, so you need to manage your risk properly, otherwise you blow up your trading account faster than what you think. For active trading, there is a risk management strategy that is called 1% rule. It's a very good strategy for scalping. I have a complete guide on this, the link is also placed in the description of this video, and I highly recommend you to watch it because risk management is one of the most important aspect of trading, and it's needed for running a trading strategy successfully and profitably. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.